Hey guys, this is David from Breakout Bus. Yesterday I didn't do a post or a video lesson because I didn't place any trades. I didn't close any trades, to be exact. And sometimes, that's the first lesson that we need to talk about today. Sometimes there are no good plays on the market and you should not force it. It's always better to go to bed knowing that you still have your cash at hand than forcing trades and losing because you just didn't wait until the perfect setup. So with that said, some days are going to be like that. Some days I'm not going to place any trades, and the reason for that is exactly um, what I just said. Sometimes you just need to sit back, study a little bit, watch the market, but if nothing comes your way, just don't force it. Okay. And then, talking about perfect trades, I want to show you the one trade that I did today and the one trade that turned out to be quite successful, even though I didn't trade it perfectly by far, as you can see on the chart right now. So today's stock pick was CANF. It's CANF Biopharma. It's a company that has been rising pre-market, and I want to show you, first of all, how to spot these stocks. Second of all, how to trade them if you want to trade them. So the very first thing you do in the morning is that you do to something called the top gainers on Yahoo Finance, and pretty much here you're able to see that as you go on the website, you're able to see the market movers during the market hours, and you're also obviously able to see the pre-market just like I showed you in the earlier video. So right now you can see that CANF is up 66.67% as we speak, and it had significant volume. But then obviously you want to click on it and see why is it up, what happened. So you go down to the headlines and you immediately see that today, Thursday, there's been some news coming out, especially in the morning. That's the important part. That's the news that will make the stock rise quickly at the market open. So at 7 a.m. it says that they announced that they had a fast track designation for its CF102 in the treatment of liver cancer. What does that mean? It means that the FDA, the Food and Drug Administration, granted fast track designation for one of their drugs, which is usually really positive. If you want to go in and click on it and read a little bit about it, you don't need to know what it means. All you need to do is to understand that this will move the market. This news will actually have some impact on the stock price. And as you can see, this stock is already up significantly. This stock was up even before the market opened. So what did I do? What I did was very simple. Look at the 1 day, 1 minute chart for a moment. So as you can see, yesterday the stock was trading at about 167. We can't see it right now because of the time frame, but let me show you a 3-day chart. Here we go. It barely had any volume. You can see I can barely pick up any volume. And then today it opened up. This is the first candle that you can see. It opened today with a significant increase at 238, and then went all the way up to 245, and then started to fade because some people are taking profits. The people that were holding this stock in the past for so long, they're taking profits. So what did I do? I waited until the first spike was done, which was about 245. Then I waited until it proved itself again, and I waited until there was a second spike because it meant that there are buyers behind this stock and there are people interested. So at that point it became interesting. And these new lines that you're seeing, they are different moving averages. So with any charting program you can calculate the moving average price of a stock. So the industry standard is usually 200, moving average 200, so it's 200 days average price. It's 50, and it's 20. Okay, so for me the red is the 200-day average, 50 is yellow, and then the blue is the 20-day moving average. Obviously, the more data, the stronger that line is, and traders usually trade based on these lines. So let's say they wait until the price comes back to this line, and then they expect the bounce, so they buy. This is exactly what I did today. As you can see, I bought my stock at 10:15 a.m. at $2.17. So I figured that the day's lowest price was about $2.10, as you can see, and I figured that I want to buy as it was coming down. I figured I want to buy it a little bit before the day's lowest, and then this way, my risk at $2.17, my risk was only 7 cents. Yeah, because if it goes below the day's low, I'm selling. My theory didn't work. However, my reward up to that point was significantly higher because the highest price of the day was $2.54. So that was a really good risk and reward ratio. So I bought at $2.17. It turns out that it came down to about $2.16 in that period. So I can say this was almost a perfect pick. This doesn't happen often, but in this case it did happen. I waited about 15 minutes, and after 15 minutes the stock broke out to a new high of about $2.67. So as usual, I deployed a stop loss, trailing stop, and I sold as it was coming back down at about $2.55, $2.56. So that's the story, guys. You just have to wait until such a big runner dips a little bit after the market open, and then you just have to ride the waves. Now, of course, in hindsight, we know that I could have waited a lot longer, and I could have made up to now about double the money that I made. I made about 18% of my money. I could have made 36% of my money, but never be too greedy. Be satisfied with what you got, and quite honestly, making 17-18% of your money in 15 minutes is exactly what we're looking for. What you need to understand is take this strategy, try to implement it, and repeat, because this way you are going to be making money in no time, and you're going to be able to be consistent and then increase the amount of shares you're buying and just make money. So this is where we stand at the moment. The stock is still rising, but eventually, it will come back because stocks tend to get overextended. So we'll see how far it will go. I might consider buying it again before the market closes, so that we might have a nice gap up tomorrow morning. But again, that's just theory. So thank you for listening. These were the lessons of today, and hopefully you can try to implement it in your own trading.